All right, let's get started. Today's topic is insurers on the blockchain. My name is Shafi Ben-Huda, and I'm the co-founder of Coverager. We were first commissioned to do a white paper on blockchain this past summer, and it felt like we were writing a white paper on many white papers because that's simply the stage of many blockchain startups. But for the most part, for this presentation, we've done research of over 100 insurers and reinsurers activities using this technology. So for the most part, blockchain is collaboration. And so you're seeing organizations like B3I come up and they're bringing together over 40 members to collaborate and test their solution. They're currently working on a excess of loss reinsurance platform. So again, very much in testing stages. This is a company that's right now independent. They went private. They recently secured $16 million in funding. Unlike B3I, RiskBlock Alliance by the Institutes is not-for-profit. They've developed the Canopy framework with two applications, proof of insurance and first notice of loss. So you should know that blockchain, for the most part, is all about contract certainty. So proof of insurance makes perfect sense. The most ridiculous definition or associations I've heard in terms of blockchain is that it's the modern equivalent of airplanes. And probably the most realistic is that it's a glorified Excel spreadsheet. But I do like how Christopher basically says that it's a set of plumbing. So for the most part, blockchain is infrastructure technology. And there's also a group of Indian insurers that together with Cognizant are looking to create a platform to verify, store, record life insurance policies. Right, so they're coming together to test this system because you do need scale in order to realize gain. The way we track activity of blockchain at Coverager is it's basically we cover the activity, we know the line of business it's relevant for, what focus is it in the insurance value chain, so anything from claims to underwriting, sales distribution. And then what are the end users? Are they employees or internal employees? Are they prospects? Are they customers, etc.? And so for the most part with blockchain, there's an even balance between activities that are there to just see an operational gain versus those that are there to expedite claims. So for the most part, blockchain is synonymous with parametric insurance. So very quickly, AIA Hong Kong developed a bancassurance application on the blockchain. Generali recently launched an application for employee benefits. Zungan is absolutely an outlier with their ABCD strategy: A for AI, B for blockchain, C for cloud computing, and D for big data. So they store all their policies on blockchain. AXA and Bajaj Allianz launched a direct-to-consumer offering for flight interruption on the blockchain, and that really should tell you we're talking about low premium policies, and for the most part also low scale. Blue Cross Asia Pacific is the first in the country to use blockchain to expedite claims in medical insurance. And there are currently two insurers that we know of that are using blockchain or planning on using blockchain in invoicing, which are Liechtenstein Life and China Pacific. And then there are cases where you have insurance companies that are underwriting a product by a blockchain-led startup. So Atlas Insurance is underwriting flight delay by Etherisk, Covea is underwriting tenant insurance by Commercial and General, and Argo is underwriting flight delay by Palm Network. So interestingly enough, with Covea Insurance, here we have Commercial and General, which is an MGA from the UK that is using technology powered by Blockshore in order to create this new brand called Insure Now for tenants insurance, renters insurance, in other words, which begs the question, why bother? Because obviously you can do this without this technology. In terms of line of business, for the most part, what we're seeing is that there is even distribution between interest in property and casualty space and life and health space. So State Farm is working with another insurer to test a system in subrogation. I mentioned the group of Indian life insurance companies that are collaborating together. MetLife Asia did an experiment that lasted for 6 months in which they were targeting pregnant women in order to offer them medical coverage with parametric claim element, right? That product was called Vitana and is now closed to the public. So definitely experimenting with this technology. Startups are a completely different beast, so it's not necessarily about operational gain or about parametric coverage, although sometimes it does apply. But oftentimes in the startup space, what we'll see is peer-to-peer schemes using blockchain to deploy their offering. Now, you could do this with or without blockchain, as you can see by the chart. Basically, what you're looking at is peer-to-peer schemes and who is using blockchain and who isn't. So for example, Teambrella is a blockchain peer-to-peer startup. Vice versa, Insurance is simply a peer-to-peer mechanism. And the trouble here is, the trouble with blockchain is we're simply talking about technology, and technology in itself is quite simple and not necessarily why an initiative will be successful or not. So the trouble with peer-to-peer is that typically the end user is required to be more involved in terms of approving a loss or collaborating with their peer in terms of what the right strategy would be, right? Oftentimes these schemes aren't regulated, and that hasn't yet been proved to be successful. Actually, on the contrary, peer-to-peer schemes tend to have a higher failure rate, especially if they're operating in insurance. There's also not a lot of reason to talk about blockchain investments because, again, this is not a leading technology. So if you're raising money, it's not necessarily because of blockchain, but it is interesting to see who raised money and who's using the technology. So obviously somebody like Zungon, the money raised has nothing to do with the technology. But it's also worth mentioning that somebody like Decent, which just entered the healthcare space, is planning to use this technology, which he considers modern technology, in order to target freelancers and kind of realize a lot more operational gains in the process. And just a bit of current events, Axioma from London is currently crowdfunding, seeking 400K, and their idea is to create a claims management platform, also leveraging blockchain. So with startups, unlike insurance companies and reinsurance companies, sometimes it's just about adding another skill set to their toolbox. Sometimes plan A didn't quite work out, so let's add plan B, and why not use modern technology in order to attract investors or partners, right? So there's definitely a use case for proof of insurance using blockchain, but if you're a digital insurance manager, your e-wallets of the world, there isn't yet justification to use this technology. And if you're a peer-to-peer scheme, then, well, you should really struggle with the strategy first before you talk about blockchain as a technology. And Dynamites is a perfect example of an initiative that didn't quite make it. The whole idea was to offer supplemental unemployment insurance. But as I mentioned, if the user is indifferent, technology is not going to make a difference. And you really have to convince me why you need to create mobile protection on blockchain. So again, all this talk about operational gains, you have to have a scale in order to realize those gains. But there are some interesting cases outside of insurance. TruePic operates in the photo verification space. And if you're familiar with Reddit, then anybody that's part of the AMA and they don't have a social media account, then TruePic is a technology being used in order to verify that person's identity. Photos are then being stored to the blockchain. Cambridge Blockchain is a pure technology blockchain startup in the finance space. PocketDoc, they've mentioned that they're going to be using blockchain in order to test use cases in health tech. They were acquired late last year, and the acquiring company mentioned their intention to continue with these use cases, and we'll just, it's one to watch. Family Points is a startup that didn't quite make it. Their idea was to create a marketplace for maternity and baby products and to use blockchain in order to verify that the reviews being posted are honest, because there's an issue with fake reviews in China. They didn't get past the funding phase, so regulation definitely came in the way. And since China and US were going to be their main markets, the product is now defunct. And here's an example of two modern startups with two different approaches. Both are operating in the home equity space. Figure is led by co-founder of SoFi and raised over 100 million. They plan to use blockchain in their offering. HomeTap, which is backed by American Family, mentions no such intention. So two to watch, simply because same initiative, different ways of getting there. So with startups, as I mentioned before, it's not due to technology or due to the lack of technology that these startups haven't necessarily been successful, but there are quite a bit of experimentation being done, even on the reinsurer side. So with startups, it's easy to see those that didn't quite make it. But if you look at somebody like RainVow, and the whole idea of RainVow was to offer parametric coverage, which, as I said, parametric is really synonymous with blockchain and claims, then this is a product for a rainy day. That actually exists today in Singapore. It's called Droplet, but Droplet doesn't necessarily use blockchain. So, obviously it's first and foremost about a product market fit and about the strategy, and only later about the technology that is being deployed. Here's an example of a peer-to-peer startup from France that didn't quite make it. Again, blockchain has nothing to do with it. So it's all a matter of looking for, past the initiative, past the experiment, is there scale? And that really talks towards the strategy of that startup. So a good example is SafeShare that partnered with Roomy, which is basically the professional equivalent of Airbnb, but there's nothing to indicate traction or any social media activity to say, well, this initiative is actually successful. So I think that the head of sales at Liechtenstein Life sums this really nicely, because here's a company that has a fund dedicated to investments in blockchain. But when it comes to blockchain startups, then he'll say that the risk is too high. So I get that. And basically with Coverdor, we're going to continue to track what insurers and reinsurers are doing, not to completely ignore blockchain startups, but as I said, not a leading technology. So it's really first about the product market fit versus what is happening behind the scenes. Thank you.